Hi, everyone. Welcome to Your Money Matters. I am Angela Durrell, publisher of the Bauman Letter, and joining me today are Ted Bauman, our editor, and Clint Lee, our research analyst. Now, today I'm going to switch it up. I'm actually going to invite you to find out more about Clint's strategy, Flashpoint Fortunes. He's actually going to give us a couple of ticker symbols today. And I bring up Flashpoint Fortunes because he has a 100% win rate still on closed positions there. So you'll want to pay close attention and tune in all the way to the end to find out what those ticker symbols are. And you want more information about Flashpoint Fortunes, there's a link above and below. Make sure you check it out. Now, gentlemen, today I would like to talk about cryptocurrencies, Bitcoin, and the others out there. Ted, I know you touched on this subject on Friday, and you did mention this sort of cross-asset effect that we're seeing as Bitcoin is tumbling. So I did want to talk about it a little bit more today, because really I think people, whether or not they own any Bitcoin, they're still affected by this. And you did talk about that. So I wanted to get into more specifics and focus on that. And I know, Ted, you have some very strong feelings on the subject, but love it or hate it, it's a big story.
Yeah.
So let's dissect it a little bit. And today, let's start with you, Ted.
Okay, let's do that. So essentially what I was saying on Friday is that you have cross-asset effects. When a market like the market for Bitcoin or cryptos goes to the heights that it's seen, if you start getting a big pullback, then presumably some people might have participated in that market on margin. In other words, they borrowed money to buy Bitcoin and they need to liquidate. And rather than liquidating the coin, I think some people probably sold off some stocks, to generate some cash to maybe meet whatever obligations they had in the Bitcoin market. And that just goes to show you that you may not own it, but it's going to affect you, right? And I think that's an important point. So let's look at the overall Bitcoin market, and then I'll talk about what I think of cryptocurrencies. And then Clint, I think, is going to tell us what he thinks the direction is going to be from here. So first chart I want to show you is one Clint came up with, which is the total market cap for all cryptocurrencies. And as you can see, it reached really an incredible high in May, and then it's pulled back. I mean, you're really talking about $750 billion. I'm not sure, but it's a lot of money was wiped off the value of this thing. Now, one of the things about cryptocurrencies is that they are supposed to be currencies, right? Now, any currency that behaves like this, nobody's going to treat it as a currency because you just do not want to use any kind of a means of payment that has that level of volatility. So just to get it out in the open, I think effectively Bitcoin in particular, unlike some of the other crypto tokens, is really just a meme. It's an idea, right? And people buy into this idea and they like it, and so they buy it. But ultimately, it's not really a currency. You'd be insane to buy a pizza with a Bitcoin right now, because it goes up and down. You might lose a lot of money if you bought or you could wait till next week and be a lot less. But fundamentally, it's an idea, and people like the idea. And what they like most is the idea that they could actually sell to somebody else at a high point. It's what's called the greater fool theory of speculation, that you think there's going to be somebody else who'll take this off my hands at a higher price. And that's really all Bitcoin is about, in my opinion. I know that's going to infuriate the true believers, but that's just what I think. It doesn't mean it doesn't have a use. It just means that it is not an asset. But let's look at the volatility of this particular thing, this meme. This is a chart that shows Bitcoin's historical drawdowns. And that's not pretty, folks. I mean, this is not, this is not something that you can really consider a proper currency. This is, I hesitate to use the word asset. I know Clint's going to probably disagree with me on this, but fundamentally it is something other than an asset as we conventionally understand them. And then now let's look at a chart that just shows price action for this year alone. This is since the beginning of the year. I mean, look at the right-hand scale, folks. Look at the percentages involved here. Again, if this was the US dollar, we would be, the world would be in chaos. They'd be burning in the streets, skyscrapers would be falling, all that kind of stuff. This is not the behavior of a currency. This is the behavior of a speculative thing. Now, I don't think it's an asset, because an asset always generate some either financial return or some sort of utility. You can use it to do something, and I don't mean buy something, I mean to actually do something for you. So Ether, for example, allows you to participate in these wonderful networks and record keeping and all the things that are part of the Ethereum system. So it has intrinsic value. It can do something for you. Bitcoin can't. So really, the only thing that people get out of holding Bitcoin is the idea that they make some money in the future out of it. And if that's the case, it's subject to event-driven volatility. And that means that it's a very, very dangerous thing for people to hold because they could, 83%, you want to lose 83% on something on a couple of weeks if the Chinese government comes out and makes a statement. So I don't think so. So I think
Elon Musk sends out a tweet.
Or Elon Musk sends out a tweet. Matt Levine at Bloomberg had a great thing where he talked about Bitcoin being like a magic genie lamp that Elon can rub and say, price go up, price go down. And it says, imagine what he could do to make money if he was really doing that. Anyway, let's leave that. So fundamentally, here's the last chart I want to show you. This shows Bitcoin over the last 3 years. And I think it's on an exponential scale. So if you look at it, it looks like Bitcoin was trading, you could almost call it a range. And then all of a sudden at the beginning of this year, it just took off. And I think for me, that's the hallmark of a speculative frenzy in Bitcoin. And so this big pullback to me is consistent with the end of a speculative or at least a big interruption in a speculative run up that is unparalleled in Bitcoin's future. Now is not the time to buy Bitcoin. I think it would be a big mistake. If you really want to do it, wait for a bigger pullback.
All right. And Clinton, I'm going to ask you, do you think even beyond Bitcoin that this sell-off in cryptos is overdone? Do you think it's time to jump back into these markets?
Well, it's interesting you say beyond Bitcoin, because that's one point I want to make, is that Bitcoin's become synonymous with cryptocurrencies, but there's something on magnitude of 6,700 different publicly traded cryptocurrencies out there. So, it's just like talking about the stock market. I mean, the stock market's made up of a bunch of different stocks. Same with the crypto world now. Bitcoin's market cap obviously dominates the crypto world right now, but that's been gradually decreasing over time. But just because that is the one everyone focuses on, let's talk about Bitcoin first. And my take right here is that at least with Bitcoin, the sell-off is not done yet. I think we could still see some lower levels here, or at least see a period of several weeks of just choppy sideways trading. And I'll show you what I'm watching to come to that conclusion. So here's one chart of Bitcoin. Now this is a weekly chart. That means each bar on here is capturing the open, the close, the high and the low that occurred for any given week. And it's just a good way to take a step back, look at the big picture, because we get so enamored with what goes on in the day-to-day of all these things. Now there's a couple things I want to highlight on here. One, if we just looked at the bottom panels really quick, the first indicator I have on there is the MACD. We talk about the MACD a lot, but then I have a new one I don't think I've discussed here in the past as well, and that's something called ADX in the bottom. And it's the combination of these two things tells me that we're in for a period of, once again, either lower levels or sideways trading. So the MACD with how it's rolling over, that's just unwinding all that prior momentum that built up in Bitcoin. And then the black line in the bottom panel, that's something called ADX. It's just a way to gauge if it's low and rising, you're starting a trending period. So you can see how it was low and rising when Bitcoin had that big run up. When it's high and falling, that's indicative of sort of a trendless market. So that's what I expect. If we look at the price chart, one level I highlighted on here in green, that was the a prior area of consolidation. So I expect that to emerge as price support. And now if we zoom in on this and look at a daily chart, so that's the next one I have for you. So still Bitcoin, but just the daily chart, so we can highlight some important levels on here. I think 30 to 40,000 is going to be your range. I wouldn't be surprised to see us come back down and test 30,000 again. That's the low end of that prior price support in the green box that I was highlighting on here. At the same time, that coincides with the green line, which is the 200-day moving average. We have a lot on the daily charts, a lot of technical indicators getting oversold, but once again, big picture, until you work off some of that longer term momentum, I still think we're in for some choppiness here for Bitcoin. But once again, I mean, as Ted pointed out, I mean, it's just, and as you pointed out, it's not just Bitcoin. There's more out there than just that. And so actually Ethereum looks better from just a relative strength standpoint with what's going on in Bitcoin. So let's just flip to to a chart of Ethereum here really quick. If you're wanting to get into these things after this pullback and you just can't wait, I think Ethereum's your better bet here than what Bitcoin is. And just a couple things to point out on this chart. Whereas Bitcoin came down to its 200-day moving average, Ethereum's only dropped to the black line on here, which is the 50-day moving average. Same thing with this is the daily chart with the MACD panel. The MACD is still above that zero line, meaning your shorter term moving averages are still above your longer term, indicating that uptrend. The price range I would look to with Ethereum right here is sort of this 2,000 to 2,500 range. But once again, just given where the price has fallen relative to some of these other indicators, there's some better support here for Ethereum. Now, the last thing I want to talk about in all of this is that, we've talked about, is crypto, what is it? Is it a commodity? Is it a currency? Is it a security? We talk about, is it an asset class? I'm starting to see many more institutional investors look at it as an asset class in a portfolio to help diversify returns to be an uncorrelated asset. So just crypto overall starting to take on that role. But it really, for me, I think it's an extension of something that's much more important, and that's blockchain technology. And I think that's where the really big opportunity is. Blockchain doesn't get a lot of attention. Cryptos are the noisy little brother of blockchain. They're getting all the attention. But here's why. It's just, for blockchain to disrupt, especially the payments industry or banking industry, it's a huge opportunity. And I want to show, because it's a very profitable industry and it's dominated by only a few firms. And one of those firms is MasterCard. So here's a 10-year chart I want to show really quick of MasterCard's total return relative to the S&P 500. So over the last 10 years, returning 1,193% against the S&P's return of 210%. And you're wondering how that can be. That's because MasterCard's net margin, so their net income relative to sales, is 41.9%. The number for the S&P overall is less than 10.
Yes.
MasterCard's ROE, the return on equity, was 105% last year. So there's still a lot of efficiencies in that industry, but it's still so profitable for the few firms that dominate it. That makes it ripe for disruption, I think, from blockchain technology. And the one way you can play that is with an ETF, BLOK. So here's a chart of BLOK. It's a blockchain ETF. It holds the companies that are participating in blockchain type mining or ledger activities. And as you can see on the chart, this is a daily chart. It's tracked Bitcoin, as you would expect, fairly closely. We've come back down to a key area of price support, highlighted with the green box on here, really close to that 200-day moving average. At the same time, you're getting oversold on various technical indicators in the panel below. This is where I think the bigger opportunity is versus looking at the actual cryptocurrencies themselves.
Mm-hmm. I want to just jump in on the point that Clint made about the potential disruption. This is exactly right. So don't get me wrong, folks. Just because I'm not, I don't see a future for Bitcoin, specifically Bitcoin, and probably most of those 6,700 or whatever they were things. There is a future for disrupting financial transactions technology, and what you've got is an oligopoly in the global markets around that. And the MasterCard, Visa, and the Chinese big bank systems, they will fight tooth and nail to stop it. But once it happens, you're going to see just an entire revolution in the way that people transact. And it's going to destroy those margins. Those margins are unholy. They're not supposed to happen in capitalism. They're supposed to be competition, and you don't have it. And so that's where the big disruption is going to come. Where that money is going to be made is still anybody's guess. But that's where the long-term benefits of crypto is going to come from, not from holding Bitcoin forever.
All right. Well, thank you. Of course, always enlightening. And I love when you guys disagree even just a little bit. So thank you for providing that for me today. And again, if you want to check out more about Mr. Bullseye, Clint Lee's Flashpoint Fortune strategy, please click the link above and below. And otherwise, we'll see you next week. Thank you so much for watching.
Thanks, everyone.
Thank you.